China is in trouble. The US has made its first move, and Europe is now siding with the States to crush China's economy. But why, and how exactly are they planning to do it? Well, we have the answers for you. But before we start, make sure to hit the like button so that you can stay up to date with all of our awesome videos. In today's video, we will be talking about China's biggest nightmare coming true. The United States has long been warning its allies and partners around the world to decouple from China. For years, Washington has been telling the world that and that they are the biggest threat to global security and prosperity. However, most countries refuse to listen to these warnings and continue to trade with the Dragon Nation. Because let's face it, cutting ties with China would mean goodbye to cheaper goods, cheap labor, and more importantly, a huge chunk of their profits. But after China's recent military drills around Taiwan, Europe seems to have finally had enough. The European Union has sided with the US against China, and they are making moves to remove themselves from any relationship with China that could risk European security interests. This is huge news, not just for Asia, but also for the entire world. Because if the EU really does cut ties with China, this will be one big blow to Beijing. It would definitely hurt the Chinese economy. Now here's the thing. The EU is China's second biggest trading partner right after Asia. Last year, the EU-China trade was worth over 821 billion euros. That is some serious money. Now if this trade disappears overnight, then China will feel it immediately. So what exactly are the EU and the US planning to do to crush China's economy? Well, to answer that question, let's look at what happened recently between the two superpowers. During the G7 summit, the leaders of the West met with South Korean President Yoon Suk-yeol. Now he was invited to attend the meeting as an observer, which is already a huge honor for Seoul. But during the talks, the Western powers asked South Korea to join them in their efforts to decouple from China. They wanted Seoul to stop exporting chips to Beijing and to invest in the Western bloc instead. Now this is a huge request, and we don't know yet if Seoul will agree or not. But there are rumors that they are considering the offer. Now, here's why. Recently, China threatened South Korea over its support for the US. As we all know, China is North Korea's biggest trading partner. They provide the rogue state with food, oil, and most importantly, money. If Beijing gets angry, they could easily sanction Pyongyang, and this could lead to another famine in the country. So naturally, Seoul doesn't want to risk that. Not only that, but Beijing is also threatening to punish South Korea economically. The Chinese government recently summoned the South Korean ambassador to express their dissatisfaction with the summit. And this alone is causing South Korean businesses to worry. In fact, many executives are becoming increasingly nervous about what China's next move will be. After all, last year, Chinese consumers were urged to boycott Japanese brands after Tokyo decided to nationalize some of the Senkaku Islands. And guess who was caught in the middle of all of this? South Korea. Many Korean companies suffered because of the backlash, even though they had nothing to do with the territorial dispute. So with China threatening economic retaliation, it makes sense for Seoul to consider diversifying their trading partners. But this is where things get interesting. You see, the US is offering South Korea a better deal than the EU. Washington is dangling the CHIPS Act in front of Seoul, promising billions of dollars in investments if they agree to decouple from Beijing. Now, this is a smart move by Uncle Sam, because if South Korea agrees, then they will be one step closer to defeating China. South Korea is the world's largest producer of semiconductors, and they make up 17% of the global supply. These microchips are essential for any modern electronic device, and they are extremely expensive to make. So if the US can get South Korea on their side, then they will be able to control the microchip supply and starve China of this resource. With no new chips, China's tech industry will grind to a halt. But the EU is not giving up just yet, even though Brussels has yet to make a public statement regarding the matter. They are trying to convince Seoul to keep trading with them, According to Korean media, the EU is asking Seoul to make a decision quickly because they need to figure out their own strategy against China. Basically, the EU needs South Korea's decision soon so that they can plan accordingly. Now, there are some challenges for Seoul here. First off, if they agree to the US offer, then they might lose access to the massive Chinese market, and this will definitely hurt their economy. Secondly, moving their supply chains to the West will cost a lot of money. We're talking about a lot. A lot. The Korean government estimates that it will cost over $240 billion to relocate their factories. On top of that, labor costs in the West are much higher than back home, so their profit margins will be affected as well. And this is where the EU comes in. Brussels is offering to help Seoul share the cost of relocating their factories, and this includes Intel, TSMC, and Samsung. According to Korean analysts, the EU is willing to offer subsidies and tax cuts to make the transition easier for Seoul. Plus, the EU is also offering to buy more tech products from South Korea. So it seems like the EU is doing everything they can to keep South Korea as their trading partner. But will it be enough to convince Seoul to stay? We'll have to wait and see. But here's the thing. It's not just South Korea that the EU is trying to win over. They are also trying to get Japan and Taiwan on their side. In fact, during the G7 summit, the EU and Japan announced a new partnership that aims to strengthen their cooperation on semiconductors. They're calling it the EU-Japan Comprehensive Economic Partnership, and it's basically a way for them to counter China's growing influence in the global economy. Under this agreement, both parties will work together to ensure the supply of critical goods, including semiconductors. They will also cooperate on research and development in the field of microchips. This means that they will be sharing technology and best practices to improve the quality and reduce the cost of semiconductors. But of course, the elephant in the room is China. Both Tokyo and Taipei are worried about Beijing's aggressive actions towards Taiwan, so naturally, they want the support of the West. And the EU is more than happy to oblige. Now, the EU has been trying to lure Taiwan to their side for a while now. Brussels has been trying to get Taipei to sign a free trade deal with them. So far, negotiations have been going well, but there are still some differences that need to be ironed out. Once the deal is signed, this will open up the European market to Taiwanese goods and services. And this is a huge opportunity for Taipei, because it means that they can sell more of their products to Europeans without having to pay high tariffs. But it's not just about trade. The EU is also offering Taiwan support in other areas, such as technology and investment. For example, the EU is hoping that Taiwan can help them develop their own microchip industry. As you know, the EU currently relies on the US and Asia for their supply of semiconductors. But they want to change that. They want to become less dependent on others, and they want to build up their own domestic industry. However, Taiwan is hesitant to agree to the deal. They are worried that if they do, it will anger Beijing. So far, the Taiwanese government has refused to comment on the issue. But analysts believe that they will eventually come around. After all, the benefits of signing the deal are just too good to pass up. So it seems like the EU is doing everything they can to contain China's rise. They are offering South Korea billions of dollars in subsidies. They are signing new trade deals with Japan and Taiwan, and they are also working on building up their own microchip industry. All of these moves are aimed at reducing Europe's reliance on China, and at the same time, they are also hurting the Chinese economy. But what do you think? Will these moves be enough to stop China's rise? Or will China find a way to overcome these challenges? Let us know your thoughts in the comments below. Thank you for watching.